Trump administration has been very pro-crypto. And if the regulation allows for people to put money in their 401ks, I don't know if you guys know what this means, right? So that means people could automatically be purchasing crypto every week when they get paid, right? Just to be clear, the 401ks oftentimes are tied to people's jobs, and they get to invest money that comes off their check every week, every 2 weeks, whatever they get paid, in order to buy the stock market. They're not sitting there picking out what to buy and what assets to buy or whatever. It just happens automatically. And then oftentimes it's an employer matching, right? So that means there's a flow of money that goes into the market called passive investing that purchases assets within the market indiscriminately. When $1 comes in order to purchase an asset, they buy $1 worth of the asset right then at whatever price it is. Michael Green has claimed the field on this idea of passive investing and the effects that it has on asset prices that go up. Because if you have this steady flow that comes in and it doesn't care what the price of the asset is, well, what happens to the price of the asset? It keeps going up. And if any active investors ever sell that asset going, hey, it went up a lot, I should sell because there's going to be a pullback, and then there isn't any pullback,
right?
They are either going to miss out or they have to chase at a higher price in order to buy it, which causes the price to go up higher and higher and higher. Think GameStop, but your entire life in the stock market. The other thing I want to pay attention to here is the dollar. So the dollar has been worrying me, concerning me. Where the dollar is right now is so on a knife's edge, most people have no idea. All right. So we have the dollar here that was been in a downtrend since the beginning of the year. Okay. And we're now bouncing. Not only did we bounce below or drop below the 100 level that's been around for several years for the dollar, we went to a lower bound that's been there for even a lower trend that's been there for even longer, or just as long actually. So this is a low that this trend was developed since 2014 down here. So you can see that we skyrocketed up from there, skyrocketed up the last time we were on there, and now we're on again. So the idea that we might skyrocket up to 120 or whatever on the Dixie, not unlikely. And if that happens, guys, we have topped everywhere. It's all topped. And good luck over the next, let's call it 4 years.
No.
If, however, this is a sign, what we do is we reverse, which looks like it might be what's going on over here, where we reverse and head down lower. That means the dollar would head down towards the 91, 92 level, which would be great for equities, great for Bitcoin, great for gold.
What do you think is going to happen?
I never try to guess what I think is going to happen.
Why don't you try to guess what's going to happen?
Well, if I were to guess, and this leads to the second story that I wanted to touch on, Donald Trump, I'll answer this and we'll circle back. Donald Trump has put in a executive order, I believe it is, in order to allow people to have private equity and crypto within their 401k. Okay? Now, on the surface, it sounds crazy. Private equity is not publicly traded. How do you mark that to market? What is what's the process? How are people to vet any of these companies? Like, you're going to invest public money into a private equity? Like, normally you can't get into private equity. You don't have enough money or the connections or anything like that to get in. But all of a sudden, they're going to sell these structured products for private equity for you to invest in inside of your 401k. The whole thing seems crazy. It's just as crazy as someone said, hey, we're going to allow 401ks to invest into comic books. All right? Because you don't know what's going on with the private equity stuff. They could make these things, the valuation they could adjust the valuation of the asset just because they're trying to sell it to the 401ks for a higher price. And who's sitting around going, I know what my 401k is buying. Most people don't even know what they own. So that is crazy. We have a question here from Emmanuel. Can you read that, Peter?
Side question: when dollar drops unbelievably low, it has sometimes been a sign for cataclysmic event that rebounds it.
Exactly. And so it could be pretty dramatic. Bounce on a dramatic bounce on the dollar would coincide with massive liquidity issues for the entire world. Well, entire world who trades dollars, which is most of the global financial system. So that would be pretty significant.
Aventura thinks
it doesn't mean you can have a bull market or anything like that, but it does make it less likely that you'll have that.
Aventura Trader says pro crypto is the way to go. I think he's liking the whole putting it in your 401k. It sounded like you were kind of on board with that. What was
okay? So yeah, that's the other part. All right, so that's the other part. So the private equity part, I don't really care so much. I know that Robinhood was getting on the game for that. They wanted to allow for the tokenization of private equity stuff like OpenAI, and I forget what the other one is, to trade in European markets, eventually to open up the rest of the world or the rest of the market. I don't like that so much. I am not sitting there going, hey, I want a tokenized version of OpenAI. It does, doesn't give me any dividends. Do I get any voting rights? This is just a way of me being exit liquidity for that company. I have no idea. Crypto, however, I do know is a Ponzi scheme. I mean, I do know is a new digital asset for the ages. All right. And the Trump administration has been very pro-crypto. And if the regulation allows for people to put money in their 401ks, I don't know if you guys know what this means, right? So that means people could automatically be purchasing crypto every week when they get paid, right? Just to be clear, the 401ks oftentimes are tied to people's jobs, and they get to invest money that comes off their check every week, every 2 weeks, whatever they get paid, in order to buy the stock market. They're not sitting there picking out what to buy and what assets to buy or whatever. It just happens automatically. And then oftentimes it's an employer matching, right? So that means there's a flow of money that goes into the market called passive investing that purchases assets within the market indiscriminately. When $1 comes in order to purchase an asset, they buy $1 worth of the asset right then at whatever price it is. Michael Green has claimed the field on this idea of passive investing and the effects that it has on asset prices that go up. Because if you have this steady flow that comes in and it doesn't care what the price of the asset is, well, what happens to the price of the asset? It keeps going up. And if any active investors ever sell that asset going, hey, it went up a lot, I should sell because there's going to be a pullback, and then there isn't any pullback,
right?
They are either going to miss out or they have to chase at a higher price in order to buy it, which causes the price to go up higher and higher and higher. Think GameStop, but your entire life in the stock market. So there's a reason for that. Why, when we take a look at the stock market, we see this.
So how likely is this to happen?
Very likely. It's happening now. This doesn't come from nowhere. All right, guys? Let's just make that clear. This move up has happened. If I were to ask you, around when, if you had to guess, around when did the amount of passive investing become significant? When would you say that is?
2009.
So it's a little bit past that. It's basically around here, around 2012, 2013. Passive investing became far more prevalent. Now, it didn't exceed active. I think it only started exceeding active around here. If I'm not mistaken, I don't know the exact date, but you're seeing the effect of it, that it just causes prices to go up and up and up and up and up and up and up. Now, President Trump wants to give this gift to us. Encourage all Americans to sight unseen purchase crypto, the top crypto assets. What do you think then happens to those crypto assets if people start purchasing them sight unseen? To the moon!
To the moon!
All right? Now, am I saying run out and go right now? It's going to go to the moon next year? No. Personally, I think that the regulations It's under Trump right now. We don't know if the next president comes in and decides, let's roll back all the things Trump did. Let's be anti-crypto. Let's undo all that because that has the stink of the orange man on it. I have no idea. So I would wait to see what the next administration does. So I guess hopefully vote Democrat and get them in order to see what the regulations are going to be.
Vote for whoever you want.
And then if it is they keep the regulations on, then you have the expectation that now institutions will start making products to sell this to those who choose 401k plans, right? Because it's either the employer or people get a catalog, they choose what they want to invest in, and this happens. And so then you can see crypto really get launched. But that's more of a not this cycle, next cycle sort of thing, right? So that's why I'm very excited about the potential 50 basis point cut and volatility events that might cause a dramatic downturn in the markets. Because once we clear out all that risk and we bottom, which we will bottom at some point, and probably sooner than you think, then we could think about the next plan of roll right in and make money to the upside.
So you're optimistic.
If by optimistic, you mean that I know winter is coming and I could survive the winter and then make money on the next spring and summer, then yes. If it's optimistic that I think the fewest number of people will suffer and there won't be a large transfer of wealth from those who have less to those who have more, no. That is pretty much definitely, in my opinion, going to continue happening.
All right. Emmanuel in the chat is asking, where do you get clear information regarding crypto? It's been very confusing for me, embarrassing to say. Following up with that, Ventura says, I think you'll like this, Tom. I follow a guy named Richard Hart. He's controversial, but always right about crypto.
Well, as far as following information about crypto, I find my life became so much easier. My trading became so much better. My investing became so much better once I stopped thinking about the narrative at all until I was already in my positions. So I wait till I'm already in my positions or I've already purchased the asset, and then I worry about what the narrative is. Because then
Can
it
you
really
explain
starts
that? The narrative, what do you mean by that?
So a lot of people are convinced by a story. Some guy told me this. I heard this on CNBC. I read inside Bloomberg that this is going to be the next big thing or this is going to be the next big flop, and they bet accordingly. Right?
But that's all manipulation.
Well, it's not necessarily manipulation. Is that there's no guarantee that the popularity of a narrative translates to the price chart. So, for example, this is a problem that I had gone in one of the last times I did this mistake, which is that after Russia invaded Ukraine, there was this talk that there'd be famine. So not only did I buy 2 other freezers and stock my fridge and try to have 6 months worth of food, I also placed bets within the markets accordingly. I thought there'd be an oil shortage. I thought there'd be all kinds of different things. And so I put a bunch of money there accordingly and lost all those bets. Because turns out there wasn't an oil shortage. It wasn't the coldest winter ever. And I had food in my fridge I still have now I didn't finish eating. Because even though the narrative was very prevalent because of the fear and all the talk about it, it was really, there to sell papers and be clickbait and whatever. Not to say that it couldn't have happened, but if I just looked at the chart, I would see, well, the futures aren't moving dramatic. The dramatic move that I'm seeing in futures are being faded. That means those who have a vested interest, their money's on the line, their livelihood is on the line. They're not betting that this is going to happen. And the price chart tells you that. The stock chart tells you that. So I first look at the stock chart, and then I go find the narrative that supports that particular idea.